Okay, welcome into my InvestEngine portfolio update this month. What a load we've got to get through. We're brand new now into the new financial year here in the UK, and the world seemingly has gone into meltdown, at least when it comes to stock markets. Let's just briefly have a look at what's been going on in the market if you haven't been living under a rock somewhere. As you can see here, the biggest story at the moment is the tariffs coming out of the US administration, sparking off a bit of a global trade war, especially now between the US and China. Initially, there was going to be these huge tariffs, reciprocal tariffs apparently at half the rate that countries charge the US, according to the US administration. And then all of a sudden, they were cut and paused for a 90-day pause from Donald Trump and just a 10% tariff set on every single country in the world. Now, this set the stock market into an absolute frenzy, and the S&P 500 had one of its best ever days. In fact, have a look here, and I think it puts the rise that the S&P 500 had about 8th out of all of the best days ever in history. Now, you'll notice that some of the best ever days came during just after the Great Depression. And it's quite funny that some of the best days in the stock market happen at least immediately after some of the worst. And this is a theme which we'll talk about a bit later when we go into the portfolio update itself. Now, as I'm recording this video, we're not quite out of the woods yet, although lots of people were very euphoric over that extremely crazy day that we just had a couple of days ago as I'm making this video. The stock market is now in a little bit more of a decline, as you'll see the headline now on screen that China has clapped back against Donald Trump's increased tariffs on China, saying that they'll match him at that 125% level, with the view that they're not going to go any further than that. Where do we go from here? I have no idea. The only option really, in my view, is that ultimately everyone just backs down and we pretty much go back to normal with Donald Trump claiming some kind of victory somewhere, when actually we would have all been better off if he didn't do anything at all.
Spoonful of tariffs makes the stock market go down.
What some of you may have noticed was quite interesting in the stock market, at least, was there's virtually no place to hide. And also, if you have a look at the bond market, which is typically a place that rallies people that invest their money and move away from stocks and go into bonds, you would expect to see the bond market, those yields especially, go down. So as the price of a bond goes up, the yield goes down. It's an inverse relationship, very similar to, think of it like a dividend stock. So the higher the price, the lower the yield. And as more people want to move away from stocks, you would expect in times of uncertainty that they then instead will buy those fixed income securities, bonds in other words, and see their yields effectively go down. But at the moment, we're seeing the opposite effect. And in fact, countries and individuals and institutions are moving away from those safe assets. And the only winner at the moment does seem to be gold, which is something that I personally don't invest in, but it's seen itself have a really great few years actually when you look back at the chart. Now, this bond market is quite an interesting thing. It's not something I spend a huge amount of time covering or looking at, but you also have to remember that bonds are owned not only by institutions, but countries too. So China does actually own a lot of US debt, and a good way for China to retaliate against the US would be to sell that debt, which I have no doubt has been happening in the background. So again, remember, if they sell that debt, it will push those yields up. Now, yields up may sound like a good thing if you're an investor, but actually you got to think of it from a country perspective. The US needs to borrow lots of money to fund its government. And the higher that number goes up, the higher their interest payments on that debt will be. So this is a very good way for countries to effectively get back and play this trade war off in the background as well. So do keep an eye on the bond market. It is quite an interesting thing that I should spend maybe a little bit more time focusing on. But however, saying all of that, I think the key thing here for us, at least for investors like me, if you are a long-term investor, does any of this really matter? And I think this is going to be a bit of a theme in this video as we head into the portfolio update. All of these huge swings in the stock market, whether that's those big swings down, pushing us into a bear market, pushing us maybe into some kind of stock market crash or recession, and those days where the stock market rallies 10%, do any of those days really matter to us as long-term investors? My answer to that will be almost certainly no. None of this matters at all. But really, all of this is very much easier said than done. But let me jump into the portfolio now. We'll have a little look around and I'll go through what I try and think of as a long-term investor and how I'm going to get through whatever you want to call the next few months or years, stock market crash, trade war, you name it. Let's have a look. Okay, so let me jump into my portfolio now. As many regular viewers will know, I have two accounts with InvestEngine. I have my Stocks and Shares ISA, which you can see here. And then if you scroll down through all my different portfolios, I do also have a small personal pension, which is down here. Let's focus on the ISA, where we're going to talk about lots of different things in this month's episode. So first things first, we have started a new financial year. So all of your allowances have been reset, just in case you weren't already aware. I did do a video covering my best ISA accounts and going through different options there, but do remember that every adult in the UK has now had their ISA allowance reset at £20,000. So you can put new money in, if you haven't already, into all of your different ISA accounts. And that allowance is shared across all of the different ISA accounts. If you're an eagle-eyed viewer, you will already see that my remaining allowance, according to InvestEngine, is £19,000 because, as you can guess, as soon as the new financial year hit, I put in my first deposit into my account. And this is really one of the things I wanted to talk about, being a long-term investor. I do not look at the price when it comes to my investments. And in fact, I want to automate it and simplify it as much as possible. I do not care whether the stock market is all-time high. I don't care whether I'm waiting for some kind of crash. Both of those things are absolutely impossible for me to time. There will always be plenty of people out there who maybe get lucky and time it once. They might sell at the top, for example, and they may even rebuy near the bottom or close to the bottom of the market. But there is no way to do that consistently over any time period. But unfortunately, there'll be plenty of people who think they can do this, and all I can say to those people is good luck. To show you this, let me just look at the last 6 months or so where the stock market's had that decline from the all market highs just a couple of months ago. As you can see, all the little black dots are where I make my investments, and I've been very steady and consistent in the way I invest. I've actually moved from £800 a month to investing around £1,000 every single month. I just put my money in a savings plan. It just comes out on the first of every single month. I do not look at the price of the stock market, and it goes into my portfolio here, which I'll go through in a little bit more detail. As you can see, the most recent purchase almost looks like I'm a bit of a genius, to be honest. If we just go back here, where I did catch near enough the bottom of the market just before we had that big rally. But as you can see, the market's also then dipped again. And where it is at the moment, I don't know where this is going to finish, because as I'm recording this video, China has just retaliated with those bigger tariffs, and the market looks to be having a bit of a down day. So once these prices for these UK listed ETFs update, we'll maybe be down a little bit more overall. But for me personally, as a long-term investor, I definitely don't care. Now, the way I look at things is, as a long-term investor, all of these things that happen in the stock market, whether it is a trade war or a recession fear, all of these things are very short term. My investing time horizon is decades, ultimately. I don't foresee myself needing to even sell even part of this in many, many years to come. And it should mean that as a long-term investor, my superpower is having that long time horizon. So I'm able to make my purchases when the market is panicking and selling off, and I'm going to be a buyer at all those points. Now, I'm not always going to catch the bottoms. I'm not always going to catch the best time to invest. But over that long-term time horizon, when the market might be all jagged and volatile and crazy, I'm still going to be a consistent buyer. Now, what I'm hoping for there is in the long term, certainly when we measure in decades, that I'll actually make some money here, certainly above and beyond inflation. Now, nothing, of course, is guaranteed in this. There is no guaranteed way that I know what the future is going to hold, but neither does anyone else. But I do know that my money will lose its value if I do nothing with it. So there's always that pressure on you to decide what you want to do with your money. Many people will choose savings accounts and keep their money in cash ISAs. I choose to invest my money, as at least if you look back over the last century or so, investing in at least global stocks and the stock market as a whole, you've done pretty well. And it's not actually something that most people do. The vast majority of people, as we know, at least here in the UK, it's about 94% of people haven't got a stocks and shares ISA. So there's a huge amount of people that aren't even invested in the market, at least outside of things like pension accounts. Now, everything I've just said isn't easy to do. It's not easy to just switch off and not look at your account. We all look at our accounts, and even me, I can lie and say, oh, as it's my job, I'm allowed to look at my accounts. I look at my accounts multiple times a day. Not something you really should do, but what I would say is that when I do look at my accounts, it doesn't have any effect on the way I behave. And what's quite good with these regular portfolio updates, I hope you'll agree, is that you can see that I put my money where my mouth is, and also I've got all the receipts to prove it. I would say that my long-term goal with these updates is really to be able to go back and I would love to have, a decade worth of these updates that any investor can then go on and look back through the years and every single month and say, this person put their money where their mouth is. They were a long-term investor. They didn't react to these crazy things going on in the market, because I know there'll be plenty of things in the future to worry about. And actually, talking about this trade war or whatever you want to call it now, I'm almost certain that in a few months, next year, or the years to come, that this will just be another piece of news and we'll almost forget about it. It will be put back in history and we'll go, do you remember that trade war that happened at the start of 2025? But then really, I think we'll just move on with our lives. And that is really what I think is going to happen here. There have been so many events when we look back at the past that the market's going to be over, or this is the start of something big. And the market did decline, recessions, crashes, corrections. These are all part of investing. But if you are a long-term investor, I truly believe you have a superpower in that you don't need to be trading in and out. You can get an enormous benefit of being a well-diversified, low-cost index fund investor, and you get to benefit from all the craziness that goes on. But anyway, I can only ever tell people that this is what I do. At the end of the day, it's all up to you to decide what you want to do for yourself. Now, on that note, if you do want to get started with InvestEngine and open up a stocks and shares ISA like I have here, they do offer a welcome bonus for new customers. You can get up to £100. That's if you open an account, you're a new customer, deposit £100 and leave that invested for at least 12 months. Other terms and conditions apply, but don't forget you can follow my link in the description. And also I'll put a QR code up too, which will take you straight there. Because funny enough, and on a side note, I'm seeing about 40% of people watching me on TVs, which is something I've mentioned before. Kind of blows my mind. And we can always have a competition in the comment section to who's watching my fat big head on the biggest screen, whether that's a 100-inch projector or maybe even more someday. Just briefly touching on my portfolio before we wrap things up. If for new investors, you will see that I have a very simple portfolio. It could be much simpler than this, by the way, of 5 Vanguard ETFs, which very much are trying to replicate a single global index fund. And I do things like this really gives me a little bit more flexibility, gives me a bit more, time to tinker around with things, but it also reduces my cost. So what you'll see here is a 0.09% expense ratio for this total portfolio. Now, this for me is an extremely low cost way of investing and allows me to potentially make a few different tweaks as well on the global market. Is your life going to be much simpler if you just had one global index fund? Absolutely it is. And partly this is a bit of a showcase that I can do this and I don't have to do this. But I'm happy to take the time and do some rebalancing now and then. But would you be better off with 2 funds or 1 fund? Maybe. I mean, ultimately with any investing, we have no idea what happens in the future, but I'm certainly happy with this. I do share this portfolio, so you can see the link down here. I always put those links in the description as well. So you're very welcome to add this to your own portfolio in different parts of the InvestEngine app. I would never say people should just copy anyone blindly, no matter what they're looking at, but at least it might be somewhere where you can get some inspiration on and understand which way you may want to invest, because at the end of the day, this is something that nobody teaches us at school, certainly. And unless you've got someone in your family who knows what they're doing, then really we're all kind of in the dark and learning at the same time. I do share some other portfolios as well. My famous one is just Index and Chill. This is just a single global index fund. And would life be better if we all just invested in a single global index fund? I think for the vast majority of people, it probably would be much simpler and much easier to do that way. But that one's shared for you as well. Take a look at that one if you want. But anyway, there's where we are for the month. The gains have certainly been hit massively from what we looked at the last few months. I'm going to continue to add no matter what happens to the market, and I'll have the receipts every single month for you to look at. Now, if you haven't already, don't forget to have a look at my best ISA guide if you're looking to open up a new stocks and shares ISA. I'll also leave another video up on screen now if you're still very much new to the investing world and want to learn how it gets started. Anyway, right, see you on the next video. Happy investing.